Inflation series is Citadel Securities head of U.S. Treasury trading, Michael DePass. Michael, thank you for joining us. It seems like nobody agrees on this inflation transitory issue. Even inside the Fed, there's a strong debate. Where are you guys at Citadel on it?
Yeah, thanks for having me. So we have a fairly wide and broad client base, and as you could imagine, a significant number of views around the topic. I think where we shake out on it and where the bulk of our clients shake out on it is that we're in an environment where for the first time in a very long time, you have fiscal and monetary policy really working in unison, in tandem, and that's a very powerful reflationary force for the economy.
But is that a long-lasting inflationary scenario?
I think there are a couple of components to it. So you clearly have the transitory pressures that we're seeing now associated with the reopening. And I think what you're seeing with fiscal and monetary policy being supportive of the economy, really driving growth and inflation expectations, that can be sustained for a couple of years at least. So over the medium term, our clients are certainly looking for that reflationary theme to persist.
And what does that mean in your world? Is that inflation-linked bonds, or have they already run up and become fairly expensive themselves?
Yeah, we've seen it expressed in a number of different ways. A desire to own TIPS is certainly one of them. Curve steepeners is another. And I think an avoidance of fixed income generally, or really an underweight of fixed income generally. Those have been the preferred expressions that we've seen.
Why is the 10-year Treasury yield at 153 if we are seeing these building inflationary pressures and very strong economic growth rates?
A few factors for sure at play. I think one of the big ones that's very difficult to untangle and figure out exactly how much it's worth is the Fed's presence in the market. So the Fed is still buying 120 billion worth of securities per month, 80 billion worth of treasuries and 40 billion worth of MBS. And that's a very, very powerful source of demand.
Are there still a lot of foreign buyers out there as well? Every time we do see the 10-year jump up a little bit, 150, 160, is it foreign buyers that are coming in and suppressing that yield?
Yeah, you certainly see foreigners attracted to the market given the relative yield pickup that you can get in the U.S. versus the rest of the developed market. So foreigners buying has had an impact. Pensions buying as their funded ratios have improved and they reallocate away from equities into fixed income. That's been a very powerful flow that we've seen as well.